Once again, we are starting in about 2 minutes, you guys. Just waiting for everybody else to get connected. Today's session is on the illusion of choice. Once again, those of you that have read the book, The Way of the Superior Trader, we mentioned a little bit about Hegelian dialectic, and we will mention that again in this session, a little bit about it. So we will be starting in about 2 minutes now. Just waiting for everybody to hop on. And also, just to let you guys know, I am up here in the Costa Rican mountains. So at times, there may be a little bit of choppiness in the playback. Bear with me. However, if it becomes a little bit too choppy, because I know sometimes it does become a little too choppy, just let me know. I will pause and do my best to get the internet back up and stable, and so you guys can listen in. So once again, we will be starting in about 1 minute. Just waiting for everybody to get back on here. Today's session is on the illusion of choice. And before we get started, I'm going to show you guys or go over the analysis that we made on USD JPY the other day. It was sent to everybody that's in the academy. If you guys are part of the Telegram group, right now we are sending the analysis via Telegram. However, we are going to be implementing a tab within the academy platform that will allow to have 1 second, you guys. Sorry, something just started attacking my dog or something. But anyway, moving forward, the illusion of choice. Before we get started, I'm going to go ahead with an analysis that was sent to the academy. And like I said, we are temporarily using Telegram as a form of communication, as a form of sending our analysis, while the academy platform is being integrated with a new tab that will allow for us to send analysis directly to the academy platform and have notifications built in. So you guys won't have any more need to use Telegram or have any spam. I know there's a lot of spam going on Telegram nowadays. So that's why we want to switch over to have everything on our own platform, keep it nice and organized. So the analysis that was sent, actually we sent 2. One of them was USD JPY, the other was USD CAD. USD CAD didn't go our favor. I took a 15 pip loss on that one. The USD JPY, however, we went about 30 plus pips profit, 35 or so pips floating right now. This was the analysis, right? The before analysis and the after analysis. So we're going to comment a little bit about why I took this trade personally, okay? First of all, I saw market structure. We can see the first few days of the week before this week, all right, last week was mostly an uptrend. So we have about 1, 2, 3, 4 days or so of uptrend. Then we get to the end of the week here, Friday, and this becomes the high of the week for Friday, right? This point right here. This is the high of the week, the high of the previous week. Now, Sunday, Monday, we know this is Sunday, Monday because there's a gap right here. So Sunday, Monday, Tuesday. Now, we saw Sunday, Monday, and Tuesday basically not break the high of the previous week, right? And then come Tuesday, they threw a massive wick to the exact high of the previous week, and also to the exact high of the previous day, which is Sunday, Monday. Now, if you know anything about what the strategy we use, the types of trades we take, there's something called the Tuesday reversal that we like to trade a lot. And this is similar to the midweek reversal. However, it happens more sooner in the week. So it happens on Tuesday. It happens off of Sunday, Monday's high or low. So in this case, in this example, we have Sunday, Monday's high right here. And it's at basically exactly the high of the previous day, the previous week as well, right? So they're respecting this previous week's high. Now, come Tuesday, a massive bullish candle is thrown up. Another large bullish candle. And then what is this? A big wick. All right. This wick was once a big fat green bar, a big fat green candle, correct? Inducing retail traders to buy into the apparent momentum or the rejection of maybe this trend line, for example, right? So let's say we use support and resistance, for example. We may be placing our support resistance line and just following the trend, because that's what we're taught, right? To follow trends, place support and resistance, all right? What happens here? Okay, what happens come Tuesday? We're following the trend, buying with the trend, right? It looks like it's making higher highs and higher lows, characteristic of an uptrend, correct? So what can we possibly expect as retail traders thinking like a retail trader? That if this apparent support, or actually this resistance, this apparent resistance, if this breaks, if the price breaks it, we should buy. All right, that's what they believe. That's their belief system that they bought into. And I'm sure we at once all had bought into that BS belief system at one point too, because I myself have as well placed support and resistance, copied and pasted support and resistance lines all over my chart. This was years ago, thinking that this would actually help me in becoming a better trader instead of looking at market structure, right? So you can see in this analysis, I have the red box, the high marked out, and then I have this other little red box here, okay? This little red box is marking, showing you guys the high that was broken with this wick, this big fat wick. It's marking the wick. This wick was the catalyst, all right? Before any of this movement, actually, before sending the analysis, I had to confirm to myself the direction of the trade. How do I do that? I look for, or I wait for, I should say, a stop hunt or an induction in the other direction. This was that induction, okay? This was that induction, that stop hunt and induction to the upside, going with the trend the entire previous week. And then what happened? All right, we analyzed price projection that it would come down to at least 117 area, between 116 and 117, and possibly even drop to 113, 114. All right, 111.76 or 111.3.4. All right, so you guys will have, I think I have a question here in the chat. You guys will have at the end time. I'll give you guys like 10 or 15 minutes at the end to answer or ask any questions, you know, why I took this trade or anything like that. So feel free to ask any questions, but just keep them for the end. So the next 2 or 3 days, I was expecting for price to reverse off of that high. Why? Because they already used the previous week, number one, as an induction. So they used this perfect trend, this very beautiful trend, right? As if it's that easy to trade Forex. Just place a few trend lines here and there, place a few support and resistance, and you may make a few bucks, right? That's what they want you to believe, okay? We saw this. I personally saw this trend, this induction trend forming, and then what happens next? The highs of the week, the previous week as well, were not broken. Tuesday, they threw a wick to the highs, a very nice wick. How many pips is that? That's like a 12 pip stop hunt, maybe 15 pips with the spread, right? And then the whole rest of the next day and coming into Thursday as well, they used to drop the market about 35 pips. We are now at our take profit level number 1 and waiting for take profit 2 to hit. So take profit 2 is around 60 pips or so. Now, that was the analysis for the week, I guess you could say, for Tuesday that I sent out. I'd like to go a little bit more in depth, however. This session is on the illusion of choice here in Forex, okay? I mentioned, if you read our book, The Way of the Superior Trader, we discussed a little bit about Hegelian dialectic. The way, or it's basically a form of mind control where you believe you have a choice, but they're really giving you the choices to choose from, okay? So, when talking about Forex, we have 2 options, okay? If you were to Google how to trade Forex, Wikipedia or Investopedia, they have a 12-step guide. I believe it's step number 6. The 2 choices they give you is technical analysis, or what's the other one? I'm sure you guys know it. What's the other one? Can I find it in the chat? Can we see someone who knows in the chat? Technical or, exactly, Julie, fundamental. Okay, so technical or fundamental. I'm not lying. You guys can go to Investopedia, 12 steps on how to trade Forex. And step, I think it's number 6, is pick one or the other, technical or fundamental. Even the best marketers know to give you 2 choices, so that no is not a choice, right? So technical or fundamental, they're giving you these choices. So you can either choose technical or fundamental analysis, basically. Now, technical analysis is based off of indicators that lag, a little bit about what we talked about right now, plotting trend lines and support and resistance lines all over your graphs as if you're gonna see something. All of these lines are subjective, right? There's no way that you can actually see that the market is going to move in your favor using these lines, because as you can see here, they use inductions, they use wicks, they use different candlestick patterns to induce you in the wrong direction, and also, meanwhile, breaking your support and resistance lines. So they give you support, they give you technical analysis, and then they give you what's else? Fundamental analysis. So technical or fundamental. Fundamental, what is this based off of? The news. And what is the news? You can go maybe on Forex Factory, and it's funny because if you've ever went on Forex Factory, I filter my impact to red, to high impact news. If you're ever on Forex Factory, right before the news event comes out, just like maybe a minute before, there's actually, before the actual data, there's a refresh button. So this actually cracks me up. This is hilarious. I imagine that, how many millions and millions, maybe hundreds of millions of traders are looking at Forex Factory or some other news site, refreshing that, pressing the refresh button, hoping that they can get the news, the actual data, maybe a millisecond before another trader, as if they actually have an edge by refreshing the little button here to see the actual price and then type in their trade that they want. That's absurd, all right? So either pick one or the other. Technical, go with the trend, support and resistance, choose maybe 5 or 10 indicators to go with it, RSI, throw on some EMAs, whatever you want, as long as you don't see the market structure, okay? Look at the news, look at Forex Factory, look at everything you want, all these numbers right here, but whatever you do, just don't look at market structure for now. Just keep your eyes on the refresh button and you'll do fine, right? This is what the 90% are doing. Why? Because if you go on Google, type in how to trade Forex, because this is what most people do, or go on YouTube or something like that, 90% of people are using the same information, right? It's either technical or fundamental, right? The illusion of choice. They're giving you the 2 choices to choose from. Choose technical or fundamental. But whatever you do, close your eyes when Dylan is talking about market structure. So support and resistance, it's everywhere. You can find it everywhere. Wikipedia talks about it. Investopedia talks about it. 505,000 views on YouTube. How to plot and draw support and resistance for beginners. Market trends, how to follow market trends, looking at market trends, right? The characteristics of market trends, creating higher highs, higher lows. All of this is basic retail information, basic technical analysis. Of course, this is going to be available to the 90% because this is the mainstream information that makes the 90% fail. All right, there's no way that you're going to be confident using a line, right, a support and resistance line that you plotted out of sheer, maybe luck, or just because you saw that it's here, but maybe you want to move it up because the wick is up here. It's so subjective, you guys, and they make it subjective. Why? Because it makes you lose your confidence. It makes you second guess your trading abilities. All right, let's do a sound check. If you guys can hear me, if I'm not breaking up or anything, let me know. Yes, already beautiful. All right, the next one, you guys are going to really like this. The wedge pattern. It is on Wikipedia, right? The wedge pattern, they teach you how to trade it as if, you're going to make money trading it this way. There's a saying in Forex, 90% of traders lose 90% of their funds, of their deposit, within the first 90 days of trading. Why do you think that is? Because of the information that's being propagated. The information that's available to the 90%. So, for example, the wedge pattern, they teach you how to trade it here. If you look at this, and read it, they teach you to trade the breakout of the wedge all the time. All right? The breakout, if you know anything about our signature trade, all right, our signature trade is based off of this exact same wedge pattern. However, we know that the breakout is an induction to induce retail traders in the other direction, in the direction inverse to which the market is actually going to go. So we can see different types of wedges, as if a falling wedge is any different than a rising wedge. It's all the same BS. What makes it so special is that it's here on Wikipedia for millions of people to see, right? Millions of people can see this whenever they want. They can type in wedge pattern, and this is the first thing that'll come up on Google, right? So they'll teach you how to trade it. They'll show you how to trade it. And what is it in turn doing? It is in turn giving the institutional traders liquidity to move their massive sums of money. All right? How can I explain this better? If this induction, right, if they're teaching you to buy this and they're breaking out to the upside, our signature trade is to sell at this point, is to sell right here at this point. They're telling you to buy when it's breaking out. We are selling. Why? Because this is institutional-based information. We are reverse psychology, using reverse psychology in the market. So, if you know anything about our signature trade, you know that this is the exact opposite of what you should be doing. However, I know some people do also trade the induction and then trade the reversal as well. But let me show you guys what the signature trade looks like if you don't already know what it looks like. Basically, the market can be in an uptrend and then it makes a high and a wedge forms. This wedge then breaks out. In this case, all right, in this case, apparently we should be buying. However, if the breakout is to a high, for example, the high of the day, and I believe this is actually a good example right here. We can see a wedge pattern forming, and then right after that wedge pattern, we see the breakout. That breakout is the induction. These big green candles and that wick, that's where you're taught to buy, right? That's where you're taught to buy. So after this breakout, if you sold here, because it did actually break to the downside first, if you sold first, you were creamed because this massive move was about 25, 30 pips. If you didn't have a large enough stop loss, you were taken out 30 pips, right? This is also not only to take out the sellers that sold after the wedge breakout, but to induce buyers to get liquidity to move the market in their favor, okay? Because there is always an equivalent in the Forex market. So if Bill Gates wants to sell 100,000 units of USD JPY, 100,000 lots, 1 million lots, if he wants to do so, he needs 1 million lots on the other side buying, right? Because there's always an equivalent. If he needs to sell, he needs to look for buyers, okay? So the induction is to create liquidity to have on the other side of the institutional traders or the hedge funds accounts. All right, here it is. Investopedia. So I'm not lying. Let's look at it. Step 6. All right, no, I did lie. It is not step 6. I'm sorry. It is one of these steps. All right, steps 9. Fundamental analysis versus technical. Break into Forex in 12 steps. Fundamental versus technical analysis. Right there it is. Hegelian dialectic. A framework for guiding thoughts and actions into conflicts that lead to synthetic solutions which can only be introduced once those being manipulated take a side that will advance the predetermined agenda. Controlled opposition, problem, reaction, solution. If you want to know a little bit more about how we take this into perspective in the Forex market, please check out our book, The Way of the Superior Trader. All right, technical analysis right here. It's a known broker, XM, a known retail broker. Of course, they're going to accept retail traders and then give them charts, messy charts, using technical analysis with all of these, different support indicators, 2 different RSI indicators, stochastic cross indicator. If I see this on your chart, I know one thing. You have no idea what you're doing. You have no idea what market structure is because you're using these indicators. You do not need to use these indicators. You do not need to have, like, for example, here I see about 10 or 15 different indicators on this chart. You do not need to fill your chart up with all of this. Right? In this example, I don't have a single indicator. I don't have a single support and resistance I have a few trend lines and a few zones. And I'm using the reverse psychology mentality of why the market moves in the opposite direction, right? Who's looking for liquidity? Who's being induced when? Chris has a question. Why are there admins in Forexia teaching us to trade with indicators? I'm not bashing anybody that uses a few indicators because as the Forexia admins know, and I know what they teach as well, they base everything first off of market structure. Especially Brandon and Mark, you'll always hear them saying, look at market structure first before you see, because I know some people use indicators as a confirmation after confirming market structure, right? So this example, there's a load of indicators on the chart, but I've never seen a Forexia admin with a chart like this, where there's at least 10 different indicators. I know Brandon maybe uses EMAs, Mark uses EMA and TDI every once in a while, but that's fine because I know they have a base knowledge in market structure. Why? Because they've went through my courses. I've taught them as well. All right, this is a great one, you guys. Citadel Securities. CitadelSecurities.com. Making better markets for a better world. If you guys can see my screen, please let me know. Please let me know in the chat if you guys can see my screen right now. All right, perfect. CitadelSecurities.com. Making better markets for a better world. These are the people behind the markets. These are the institutional traders, the hedge funds, the people with accounts of hundreds of millions, if not billions and billions of dollars. All right, this is where the liquidity actually comes from. Citadel Securities is a massive provider of liquidity in the stocks and Forex market alike. So if we come down here, welcome. Our mission is to create the fairest, most transparent, and open markets in the world. So I like to delve into the occult, the hidden arts, and they have a saying that the best way to hide something is to hide it in the open. So right here, CitadelSecurities.com, open to anybody. Right here, they tell you that their mission is literally to create the market. Create the fairest, most transparent, open markets in the world. We carry this out every day by providing clients with a seamless trading experience to meet their liquidity needs. So these guys actually, let me show you guys, making tomorrow's markets. So tomorrow, these guys will be filling in you guys' buys and sells, whatever you guys want. Let me show you guys exactly what we are up against. I shouldn't say we're up against them. We're up against the people that are spreading. Actually, we're up against the propagation of BS information. We have to use reverse psychology to understand the games that are being played against us, okay? We have to understand that Forex is a one-to-one equivalent. If there is someone buying, there has to be someone selling to fill that buyer's needs, right? It has to be. It's always one-to-one. So Citadel Securities, once again, ask a trader the structure of financial markets. So this guy isn't going to tell you BS about market structure, but he is going to tell you what a market maker is and what it is used for. So my personal belief, and I believe Mark and some other admins believe this as well, that the market structure, or the market maker, I should say, is actually, it isn't actually a person or a group of people. It's more maybe a bot or a super intelligent computer system that knows how we think, and it can evolve by using all of this data, this past data. So let's play this video and let you guys see exactly what a market maker does, right?
People would gather in a central place, bringing something of value to trade. That could be food, animals, metals, just about anything. Sometimes you meet a person, a counterparty, and they'd have something you want. But to trade, you needed to have something they want, and it had to be the right quantity. The odds of that weren't high, and until you found a match, you'd either have to wait or sell at a price lower than you wanted. Now imagine there's a person standing at the center of this marketplace. He or she is willing to trade with everyone. If you want to buy something, they'll sell it. If you want to sell something, they'll buy it. This person is making a market. Each time the market maker sets a price, two things have to happen. First, the counterparty has to be shown a price that they like.
Look at that. Did you just hear what he said? The counterparty must be shown a price that they like. So, what does this mean? They must induce a certain amount of retail traders in the opposite direction, showing the retail traders a price that they like, right? He says it word by word right there. Giving them the liquidity to either sell or buy, right? The market maker gives the liquidity, us, retail traders, the opportunity to buy or sell whenever we wish. So it's not actually the market maker that's the bad guy. It's the propagation of stupidity, right? Stupid information, Hegelian dialectic that's running amok in our society. It's not just in Forex, it's in every aspect of our lives, whether it's healthcare, the education system, NASA, right? Everywhere, all right? There's so many lies. Let's finish what this guy's saying.
And second, the market maker makes a profit, so they grow, stay in business, and keep the market functioning seamlessly. It's dynamic, because either everyone wins or the market doesn't exist. Market making ripple out to the real economy. If an investor thinks a company is under or overvalued, they can trade with a market maker right then and there. They don't have to wait as long to make a trade. They also get a better price because of the increased competition for their trade. The bridging of time makes markets and their economies more efficient and more flexible. And that's one way that better markets make a better world.
All right. Awesome. Better markets make a better world. So the market maker is a liquidity provider, right? It has two different names, liquidity provider or market maker. Like I said, we're not up against the market maker. We are up against the invalid information that we've been taught, support and resistance alike, indicators, all of this BS knowledge that makes us believe that we have an edge. How are we to have an edge when it's the same knowledge that the 90% are using? If the 90% fail, how is it that we can use the same knowledge of the 90% and expect to win, right? Alrighty, if you guys have any questions, feel free to let me know. This has been, I think, most of what I wanted to speak about in this session. Is your book in the form? If you guys have access to the Academy, which you should, the book is in the downloadable archives section. If you log into the Academy, it's there's a top bar. On the top bar, there's a little cloud with an arrow in it. Click that. It's a little icon, and it'll bring you to the downloadable archives where you can download that book. Sometimes the signature trade fails. Any tips on how to filter them out? Yes, Jermaine. The signature trade, always make sure that it is at the high or low of the day, high or low of the previous day. And also the signature trade setups that do fail, most of the time, in my experience, happen Sunday or Monday or Friday. And if you're like, for me personally, I use the signature trade structure combined with the midweek reversal, which helps me out a ton. It gives me maybe a 70 to 80% win rate with the midweek reversal and the signature trade built in together. However, just the signature trade, I would say look for the signature trade Tuesday, Wednesday, and Thursday. That's all. And also, always make sure that you get in after the stop hunt to the high or the low, and always make sure it's at the high or the low of the day, the previous day. All right. How many trades a day do you personally take? Jake asks. I don't even trade every day. I personally believe trading can become an addiction. I also talk about that in the book that I wrote. Forex can become a drug, right? You only get withdrawals from drugs. So if you want to be profitable in Forex, you want withdrawals. You don't want it to be a drug, because then it will consume your life. You don't want to be on the charts 24/7 looking for trades every day, because that was me at one time. And trust me, I would lose day in and day out. I take right now maybe 2 to 3 trades a week. The trades that I take are normally midweek reversals or Tuesday reversals, or the reversal that happens on Thursday. And they range from anywhere from 30 to 50 to 100 plus pips, depending on whether it's maybe the midweek reversal that usually runs anywhere from 50 to 100 pips profit, 100 plus pips profit. So that's really all I need to take personally, because that's what suits me. I don't like to be looking at the market every day. I have found my strategy. It's to look at the market Tuesday, Wednesday, Thursday. If I see a setup, I'll take it, but do not overtrade, right? What is your take on the market maker method, highlighting key areas of price of the market of price whole numbers? Whole numbers, I believe, that does play a big role in trading, because retail traders or traders in general, we're humans, right? If the price is if we think the take profit's going to be at 1.9999, we might as well put 2.0, just because we're a little bit lazy and we don't want to type in 1.99999, right? So that's why whole numbers a lot of times are targeted, because they're key psychological areas. The market maker method, however, I believe the structure taught in that method, I believe it's more of a mindset, right? It's more of a mindset overall. The reverse psychology behind it, right? what is the market maker doing? What is the retail trader herd mentality doing overall, right? These two different sides, understanding this is the most important aspect. The market maker method, actually, I went through it. It looks to me like there's a lot of template being used. There's a lot of indicators that aren't necessary at all. And a whole template has been created around this method that isn't necessary at all if you actually know market structure, if you actually can use reverse psychology in the market to your favor, right? Ask yourself, if I was a retail trader using support and resistance, following trends, what would I be doing in the situation, right? If I was a market maker, how would I be inducing the retail herd in the opposite direction? So, thank you guys. I believe that was the last question. If you have any more questions, please let me know. I will be ending this session real soon. However, next session is tomorrow, so it'll be awesome. We have a session for tomorrow. Brandon is going to be expected to perform tomorrow, so I'm not quite sure what the topic is, but we will let you guys know. The last question from Chris is, in one of your videos, you mentioned that the most you should be observing is the previous day or week. Yes, you should look at the highs of the day, okay? So in this example, I was mentioning the high of the day, the high of the previous day, right? Sunday, Monday. If trading Tuesday reversal, we're looking at Sunday, Monday high of the previous day, or highs as well of the previous week, right? Which both were respected, induced but respected. Alrighty, you guys. Once again, thank you for this beautiful session. If you guys do enjoy Forexia live, this is just the start of it. We're going to be implementing so many things, so many amazing things. So there's not an exact date, but you will see time from time, every once in a while when you log on to the Academy, new upgrades to the Academy being introduced. For example, we want to integrate graphs into the Academy, actually integrate TradingView itself into the Academy platform, so you guys don't have to even go outside of the platform to analyze charts or anything like that. So just another benefit of being with the Academy. Thank you guys once again for tuning in to this session. Once again, tomorrow's session is with Brandon. So if you guys did enjoy, please give it a thumbs up. No, this isn't YouTube. But thank you guys. Peace out. Have a great night, you guys.